All right, everyone, this is Marco Palmero, founder of Ulysses in Dubai. And in this video, I want to talk about off-market deal flow, off-market investment and acquisition opportunities in the Middle East. I want to talk about some of the processes that we went through, the evolution of my thought process around that, and what I've seen work the best when it comes to sourcing premium opportunities in the Middle East market, at least from an acquisition and investment standpoint. So you might be accustomed to many ways of sourcing leads and deal flow if you are in the industry, if you're looking at investment, if you're looking at business acquisitions. Some of the most common ways are through your existing network, through professionals. Of course, there are brokers and other businesses that are listed online. Now, all these instruments I found to be less effective here in the Middle East for a couple of different reasons. First of all, access to data is not as good as other markets, so you don't get as much as you need from these types of resources, and sometimes it's better for you just to collect the data yourself. And the second is of course, the businesses that are listed and the opportunities that are listed in the open market are accessible to everyone. And so many times you will compete for deals that are not actually the best ones. And so the trade-off for me doesn't really make sense, because I'm competing with a lot of people for deals that are not the best possible ones in the market. So why would I do that, really? It doesn't make sense. And so, especially in the UAE market, which is a very competitive market, very liquid market. A lot of people buy and sell assets on a weekly basis. I've seen that the conventional way of doing things is actually the best. I mean, the unsexy, unpopular shoe leather approach is what really gets the job done. And I mean, cold calls, cold emails, visiting businesses. This last one, probably the best possible thing that you can do. Are the tools that are really going to get the job done for you. Of course, if we're talking about small, medium-sized asset acquisitions, if we're talking about big corporates, that's a whole other subject, and I'm not covering that in this video. But with all that being said, let's talk about why I feel that is the case, and also why a lot of people don't do these types of things from my perspective. Well, of course, it's time-consuming. And sometimes big firms or other private equity groups might not necessarily believe that it is worth the hassle to source deal flow that way, especially if we're talking about small transactions that are not move the needle for them a lot. The point is, you're leaving a lot of money on the table that way, and especially if you're targeting small, medium-sized assets, I would say below $25-30 million in purchase price. You're basically leaving all the good opportunities on the table, because that's how you find deals here in the Middle East. And there are a couple of reasons for that. Well, the first is, many times people in businesses that are listed for sale officially, so to speak, will not only be the medium and not so good opportunities, but will also be the people that are not as motivated as you might think in selling the business. And as a consequence, they're going to be harder conversations to have. And they're going to try to get the most out of the deal. And they're not going to have a lot of commitment in getting a deal done. They're just going to be interested in maximizing the amount of money they get out of a specific transaction. And what I've seen over time is that generally the real motivated people don't talk too much about their business being available for sale. And that is for a variety of reasons. I'm not going to go through all of that in this video. Some of that we share with the people that we work with. But the point is, the best possible targets sometimes don't talk too much about their business being available for sale. Now, if you ask them in a private setting, then they're going to tell you. And then you get access to a quality deal that nobody knows about, and that particular individual will be less likely to share the opportunity with other people because it doesn't want to know It doesn't want the market to know that the business is available for sale, because it thinks that it might hurt the reputation of the business, it might affect the company in some shape, in or other form. And as a consequence, once you have that lead, chances are you're going to be able to keep it and get a deal done, of course, if that matches your acquisitions criteria. And so what I found over time is that really having the interaction with the sellers, talking to them directly, not having intermediaries in the process, and building that type of connectivity really helps you in sourcing quality deal flow. And of course, as I mentioned before, this is a time-consuming process. It takes a lot of effort to find these opportunities, especially if you're visiting them personally. I mean, I visited more than 1,000 facilities, I think. Sometimes I was visiting 5-7 businesses a day. And that's not something a lot of people are willing to do, especially when we're talking about small targets that maybe are $2, $3, $4, $5 million businesses. Now, the point is, the real money is all in those opportunities. And if you're not willing to go through that step, generally, you're not going to get access to the good deal flow that you're looking for. Now, there are different ways you can go about it. You can do it yourself. You can work with companies like us to do that work for you. But the point is, if identifying market entries to acquisitions and investment is what you're looking for here in the Middle East, then that process is a non-negotiable. It's really something that you need to go through to get the best possible deals that are currently available. And again, I mentioned it before, but you are not only going to access to quality deals, but you're also going to be able to keep them longer, because these people will be less incentivized to share that their company is up for sale. And once you approach them and you share with them your ideas of buying the business, they're going to be very committed in getting a deal done with you if they can, because they don't want the information to go around. And especially in a small market like the UAE, information moves quickly. So it is important for them to keep the opportunity confidential. So this is really not only a numbers game from my perspective, but also an effort game. The ones that put out the most effort will get access to the best opportunities. And that is a process that, it takes a significant amount of effort up front, because you need to contact these people, start to talk to them and build these relationships. But as you go through the steps and you build your own deal flow, then you circle back to these people and you've already done the legwork, and that will pay you dividends later down the line. There might be a guy who's not interested in selling the business right now, but 1 year from now might become, very interested in doing that. And guess who's gonna call when he thinks about selling the business? Probably the guy, he had a conversation with a year ago that built a solid conversation around potentially acquiring the asset, rather than a bunch of brokers that were just trying to spin the business for the most amount of money. And so from my perspective, the trade-off of time that you make to source these opportunities is worthy, because it pays you back tremendously down the line. And of course, not all the deals that you're going to find this way are going to be valuable ones. And I found some terrible deals, and I wasted a lot of hours pursuing wrong opportunities this way. But the moment you find the right ones, you have an hidden gem that nobody else will have the ability to access, and that you can capitalize on. And that, I think, is the most important thing when looking at off-market deal flow. I think the competitive advantage that you want to gain is a big enough window of time to close a transaction with a seller, and also access good opportunities that you can actually buy. And so in order to get these two things, if you focus on off-market opportunities, you're going to stretch and expand your window of time to close a deal, and you're also going to access good opportunities in the first place. So the cycle is going to be a lot better for you. You're not going to be in a rush, so you're not going to make bad decisions. And also you're gonna work on opportunities that will pay you better later down the line. So to me, it's always worthy. It makes the most sense. And, not only for ourselves, but also for other people, it is what gave everybody the best results. Working on off-market opportunities in targeting owners that might not necessarily have their business listed out for sale. So I think for all the people interested in looking at market entries, investments, acquisitions in the Middle East, either working in finding off-market opportunities or collaborating with somebody to do that is mandatory, and it is what is going to make the difference between failure and success.